Hey guys, welcome to the Wave Crypto Club. We talk about all things crypto. In one of our earlier episodes, we had spoken about Vault and what happened to the users at Vault, why it could be a huge problem, especially in terms of getting their assets back, and exactly like what we spoke about last time. This is exactly what Vault has come out with a statement that they have a mismatch of assets and liabilities. I had mentioned to you last time that historically what has happened with exchanges or any such scenario where the total amount that the company owes back to the investors is lower, then usually the investors have to take a haircut. Right? If you look at this, Volt says that they have only about $330 million worth of assets, whereas their liabilities are about 400 million. That means each of you, assuming that they're going to return each and every bit of this $330 million back to you without asset prices changing, that means each of you might get only about 82.5% of what you actually had invested. If you had put $100, you would get back $82.5. That's it. In fact, that's the optimistic side. You might get lesser than that if they don't find any investors, any other financing method to bridge this gap. So they did, try to get a term sheet with another company. They are in the works for that. That's what I believe. In addition to that, they are, seeking a 6 months moratorium to try and figure out a way to fund this gap and return the money to the users. But as of now, what you can at least estimate is that if they do not get their financing, which it looks highly that it might not happen, then because that's a huge gap, right? 70 million is a huge gap. Any investor who would want to come in and put in $70 million, they need to get back that money at some point in time and more. It's not just that much. So I feel that's too much of a gap, and any investor coming and putting in that much of money doesn't seem too likely, right? So most likely in all cases, I think that everybody's going to take a haircut. That's pretty much what might happen with this. Then there's the other news of Bitcoin rising, right? It looks optimistic, but no, don't go by that. Bitcoin has gone well above the 20,000 mark, but do not go by that. Even if you look at the fear and greed index, the fear is 30. It was like 6 last month, and it slowly has gone up to 16, 20, 30. It's probably because prices have sort of consolidated. People were expecting to drop even further, which it hasn't yet. So prices are picking up. People are now feeling that okay, it might not go down further, so let me just pick up a little bit while it's at 20,000 or somewhere around 20,000. So Bitcoin fear and greed index is at 30, but don't go by this. Why am I saying that? Because the United States just released their inflation numbers, I think last week, and it was 9.1%. This is the highest it has been in some 40 years or something. Right? Just look at that insane inflation. 9.1% in a developed country is unimaginable. In a developing country, that's perfectly fine. But in a developed country, 9.1% is crazy. What is going to happen? The Fed has already increased interest rates by 0.75 basis points, 75 basis points in July, and in June actually, and they might increase it. At least this poll says they might increase it by 50 in September, but no, I think it might be much higher. It might be 75 basis points increase again. What will happen when that happens is that more liquidity is going to get sucked out. Right? More liquidity is going to get sucked out of capital markets, of the crypto markets, and that's going to move into safer assets. Crypto prices will crash further. Don't go by this increase in price. This is a short-term price. I had predicted multiple times in the previous videos that in the coming months, between September to November, is when Bitcoin price could crash to about $14,000-$15,000. Inflation numbers, the likelihood of the Fed increasing interest rates all indicate to that same direction, that the September hike of the Fed's interest rates will trigger another sell-off in the Bitcoin markets, leading to a price crash somewhere close to $14,000. And I think that is the bottom. At least I'm going to put my head, neck out and say that is the bottom. And after that, probably it will start easing out, because by then, even I'm assuming inflation will also be under control. any interest rate hikes after that will not have too much impact. But that I feel is really the bottom for Bitcoin. So don't go by a misleading number or a figure that, hey, it's increasing now. It's possible that it might crash further. So if you are thinking of investing and hoping that you can get back some money in 3 months, no, don't do that. Be careful. Even if you invest now, there's nothing wrong in investing even now, but just be sure that you don't need that money for the next 6 months or for the next 1 year. Just ensure that you do not put in money that you might need in the next 3 months, 6 months, because most likely that money is stuck for a while. So for any meaningful returns, always think long term. This is still a good price to buy, but for meaningful returns, it might take you till all the way to September to March of 2024 for it to significantly rise, so that you see value in your investment. Having said that, all the material is out there. You can go ahead, read about it, but be cautious. Read the markets well, understand what's happening, understand the financial situation in the world, and understand your own personal financial situation, and then make a wise investment. Even though prices are low, be careful and make a wise investment. Do your own research before doing anything. Welcome to the Wave Crypto Club. If you like this video, please hit the subscribe button. Please like the video. Tell your friends about it. We will talk more about several tokens. We'll do in-depth analysis of tokens, and we'll also talk about interesting new segments that might affect your portfolio. All that and more on the Wave Crypto Club.